Now that the stock price of Tesla is continuing to fall and everything looks to be in disarray, the issue that is on everyone's mind is if we can still retire from Tesla stock. Questions begin to surface, such as whether we can count on Tesla to turn things around, and if so, how many shares we need to buy at the incredibly low prices right now. But are you aware of the bright side? When the price is lower, it is easier to accumulate more shares, which will ultimately increase our value. Now let's explore these uncertainties and make use of the most recent chart. If you already agree, hit the like button and grab a piece of popcorn. If not, now is the perfect time to subscribe. Let's find out what it takes to have a comfortable and hands-off retirement by 2030. It appears impossible to stop the Tesla stock seemingly endless decline. But hey, let's pause in the middle of the confusion to enjoy these cheap pricing. Many of us are in it for the long run, aiming for that sweet retirement in 2030, even with the short-term volatility. We need a passive monthly income of $6,000 or $72,000 yearly to be extremely comfortably retired by 2030. 5 annual inflation rate is factored into this computation for the years 2022 through 2030. Although there are others who would contend that the inflation rate could be lower, let's proceed cautiously and use this figure. We would need a 7 return on $1 million investment in order to make this income. Aquarius is by 2030. What will yield a 7 return? We don't know how much money Tesla will make in the future. Therefore, some people might think about holding onto and profiting from it. Conversely, throughout the previous century, the CP500 has traditionally averaged about a 10.5 yearly return. Since it is impossible to forecast market changes precisely, let's assume a 7 return just to be cautious. All right. Understand that given the possibility of larger gains, selling Tesla might not be your first option, but we must take into account the available data. Tesla has an impressive 17 years of business history. Regarding durability, however, we have a century's worth of S&P 500 data to fall back on. Thus, these are the qualifications you'll need in order to retire comfortably by 2030. Keep in mind that you should be able to live off of this strategy for 40 to 45 years. That will be quite the trek. Let's now investigate the various situations. By 2030, 10 million cars will be sold in the ultra bear scenario, with an average selling price of $40,000. Gary Black forecasts $48,000, but we're being more cautious and estimating $40,000 with a whooping $4 billion in automotive revenue and a 20 operating margin. This would generate $80 in profits. Regarding energy, we project revenue of over $28 billion based on a 20 compound annual growth rate beginning in 2022 and an operating margin of 20 profits of more than $5, 5 cents billion would result from that. Let's not forget about services now. Services will eventually account for a sizable portion of Tesla's earnings, in my opinion. Looking at the Quan 2020 profits, it has been profitably growing and expanding. Thus, let's give an operating margin of 20. Profits from services would come to around $8 billion from this, in sum $466 billion in sales, $93 in income, and 3.25 billion outstanding shares are what we're looking at. Dilution wouldn't make sense, so I have incorporated a share repurchase to adjust for the success. In the bear scenario, however, things are a little bit different. We are examining 50 million automobiles that were sold for an average of $35,000 in sales, with a 25 compound annual growth rate. $60 billion in energy sales is anticipated. At 20 operating margin, services would bring in almost $8 billion in revenue. We're looking at over $600 billion in revenue, approximately $124 billion in income, and over 38 EPS overall. Let's now discuss the most basic scenario. We're going to assume here that 20 million cars were sold, albeit I doubt that. Well, who knows? Maybe Tesla can pull it off. The average selling price would be $30,000 and energy revenue would increase to $47 billion at a compound annual growth rate of 30. Estimated service revenue is $77 billion out of a total revenue of around $700 billion. EPS would be close to 46 and net income would be around $145 billion. We're looking at 23 million cars sold a year in the bull case with an average selling price of $28,000. Revenue from energy would increase by 35 annually to $62 billion, while revenue from services would rise to about $88 billion. As a result, there will be close to $800 billion in total sales, over $150 billion in net income, and 48 EPS. In the ultra bull scenario, we are discussing 25 million autos that were sold for an average of $26,000. Revenue from the energy sector would soar to $80 billion, increasing at a startling 40 each year. The income generated by services would be staggering, more than $100 billion. All of this results in revenue that exceeds $800 billion, a net income of $176 billion, and an earnings per share of more than 51. It's absurd. Remember, that all of these forecasts are just facts, projections. Please take these with a grain of salt, as they are not facts. Now, buckle up as we examine possible Tesla stock prices in 2030, covering both the optimistic ultra bull scenario and the pessimistic ultra bear situation. The ultra bull scenario is predicated on a fee ratio of 15, whereas the ultra bear situation requires a ratio of 25. Prepare yourself for these astounding numbers. The stock price might soar to an astounding $718 per share in the ultra bear scenario, giving the company a market capitalization of more than $2.03 trillion, advancing to the latter. The base case forecasts a market capitalization of more than $3.06 trillion and a stock price of more than $1,100 per share. In a bull market, we might see Tesla shares surpass $1,200 per share and reach a market capitalization of about $3.09 trillion. In the audacious ultra bull scenario, the stock price might ultimately rise to about $1,300 per share, boosting the market capitalization to almost $4.02 trillion. We are genuinely amazed by these figures, which make us wonder about Tesla's possible future trajectory. Let's now turn our attention to the quantity of Tesla shares needed to become financially independent by 2030. The most exciting part is coming up, I hope, when we figure out how many shares we'll need at different stock prices in order to hit the $1 million milestone. Remember that the present stock price of about $150 per share serves as the foundation for our study, so any changes could have an impact on the overall worth. That being said, let's get started. In the case of the ultra bear, you would require about to reach $1 million by 2030, 1393 shares or $210,000 worth must be acquired. Even though $200,000 is a significant amount, especially in a recession, it serves as the starting point for our computations. As we proceed to the latter, we come into the bear scenario in which 1048 shares or $157,000 in dollars would be adequate. As you can see, this is a big improvement over the ultra bear example, costing $50,000 less. First, let's examine the base scenario, which requires 892 shares or a value in dollars greater than $133,000. As we move closer to our objective, the bull case requires 774 shares or a value in excess of $116,000. Lastly, there are just 706 shares or a monetary value of roughly $108,900 would be sufficient to start down the road towards the $1 million milestone or bold ultra bull scenario. Every scenario contains prerequisites and possible outcomes, including the ultra bear, base, bull, and ultra bull cases. Even though the ultra bear case could appear overwhelming given the high stock price, success is still attainable if you put in the necessary effort and dedication. The base scenario, which calls for a significant but reachable quantity of shares and a monetary value, is a more practical choice. While it's an improvement over the earlier situations, it's still a difficult task. Nevertheless, if you're committed and have faith in Tesla's future growth, you can achieve your financial objectives. Let's now focus on the bull scenario, which indicates a much higher stock price forecast. If the situation comes to pass, there could be significant benefits. It's still a six-figure investment, but it's an improvement over the earlier situations. Last year, dedication and self-control are still essential to success. In the ultra bull scenario, the stock price rises to an even greater level. This scenario provides a potential 9-fold return on investment by 2030, despite the associated financial commitment. Though it's not quite cheap, it's a more practical choice than in the other situations. It's crucial to remember that not everyone can afford to invest a sizable amount of money like $116,000 all at once. This is the point at which dollar cost averaging is essential. Smaller, more regular investments over time will help you reduce the dangers brought on by market swings. Many investors view Tesla stock as the best chance of our lifetime since it offers such a wonderful potential. The six-figure investment required may deter some people given the financial needs. To find out how much you would require at different price points, let's experiment with the present stock price. The required initial investment is much decreased when the stock price declines. To see the possibilities, it's worthwhile to investigate several scenarios. In conclusion, it is totally feasible to retire comfortably on Tesla shares by 2030. This is not the opinion of a single person. Even long-term investors recognize Tesla's bright potential, even the ones who have become pessimistic. The market will turn in Tesla's favor once complete self-driving is settled. Recall that they have faced similar questions in the past and disproved the skeptics. FSD will revolutionize the market by continuing on the same path. This concludes the video. Click like if you found it entertaining. For more fascinating material, make sure to subscribe to Tesla Stock News. Together, let's continue on this trip. I'm grateful.